3M, Triple M, or as I like to call it, money-making machine. 3M has been around for over 120 years. Over the years, they have amassed over 60,000 products such as head protection, tape, and even bandages. We're going to be dissecting their quarterly report, which they released today. When looking at the press release, we can see that they state their sales went down. The yearly sales on the income statement paint us a similar picture. What is fascinating is the drastic change from GAAP operating margin to their adjusted operating margin. In the adjusted margin, they are certainly excluding their most recent litigation settlements that are considered one-time expenses in their eyes. This is why adjusted operating margin is positive, as without these settlements, they would be operating efficiently in terms of their margins. After doing a quick free cash flow analysis, we can see that this year they have grown free cash flow at a better rate than in 2022. This means that they will have a bigger cushion to deal with certain issues and lawsuits, such as the $6 billion earplug settlement. We Americans love our veterans, and although 3M paid for this settlement monetarily, they may have tarnished their reputation significantly. What's important to consider is their new spinoff in the healthcare industry. If 3M couldn't make an effective earplug, who's to say their healthcare products will be any different? Technically, this stock has a lot of really good indications on where the chart may lead us next. First, I usually never use simple moving averages, although what I wanted to point out is how 3M stock acts when reconvening with the 20 simple moving average. We can see how rejections have stepped into place from previous times. Could this time be any different before another leg lower? Zooming out into a larger time frame, we can see that the 108 to 110 zone is supply for 3M and will need to be taken out for any upside. Looking left, we can see an area of previous supply around the $98 zone. What is interesting is that we are pulling back into this area for a potential retest. If the stock can build off of this level, it wouldn't be unreasonable to assume a break and retest is occurring. If 3M does start to slip lower, since it is in a downtrend, we can expect the next level to come in around the $68 to $70 zone. The annual report should come out soon and offer more guidance into the Giants' business.